train leaving the station.
So the question is, why have gold stocks been so disappointing? And there are four reasons that I can think of, or that I did think of, and I probably missed some of them. First is the fact that we have ETFs. So for individuals who want exposure to gold, gold became very user-friendly when the Gold Council launched the ETF GLD in 2004, and that now has a market cap of 60+ billion, maybe a little less since the correction. And so it made gold user-friendly, and what it basically did is it raised the bar for gold mining stocks. Who needs an equity if you can just own the ETF, and if you want to get experimental and take some risk, you could margin it and do it that way. So that kind of cannibalized demand for gold stocks. I don't think the ETF actually drove the gold price. I think it helped it, but I don't think it really drove it. But it's certainly been a contributing factor. The second thing, and really I think the biggest one, is that investors, I'm not saying people here, but generally people who might buy gold equity didn't trust the gold price, and thought that there was a flash in the pan, listened to Jim Cramer on CNBC, what have you, and had deep suspicions that there was a sustainability to the high level of the gold price. And I'm going to go and address that in detail in the next few minutes. Another thing that was going around was margin pressures and the thought that, gee, oil prices are going up, base metal prices are going up, the cost of building new mines is going up. So these guys are never going to make money, and I'll address this too. But that certainly was one of the perceptions, I think, that has weighed on the share group performance. And then lastly is this idea, and I think this is very important, it's not spoken about much, is that gold stocks in 2008, so I call it the hangover from 2008, were disappointing. Those of us who own them, you know, when I woke up the morning after JP Morgan took out Bear Stearns, I said, my God, I'm going to have a great year. My clients are going to love me. You know, gold was $1,000. And then as the year progressed, the gold price went from 1,000 back to 700. But the gold stocks just were in steady liquidation all year long because, of course, we did have a bear market. So one of the things I think that has disappointed investors was the fact that in a world in which most people who own gold would have cheered that, gee, the financial system is coming apart, gold stocks in particular didn't do the job. The metal itself actually finished the year up slightly, but gold stocks were down roughly 30–35%, and you know, the small cap stocks were down 80 and 90%. As bullish as I am on gold, I'm even more bullish on gold equities. This deals with the issue of the gold price. The fact that the spot price went into a steep rise starting at the beginning of this year for all of the headline issues that we know about was certainly gratifying to people who own the metal. But the stocks kind of just lumbered along and didn't really participate. One of the reasons for that, and I think it's a plausible reason, is that gold companies get paid on the average price of the quarter. They don't get paid on the spot price. And so if there's any suspicion or skepticism that the gold price might have a pullback, as it in fact has, a reasonable investor would have waited to see where the gold price is pulled back before you could start to price in a higher level of gold prices. So I think what you're going to see in this current quarter, the third quarter, which just finished, you're going to see some just unbelievable numbers. Earnings and cash flow, you're going to start to see dividend increases that are going to make the gold stocks look very cheap. And if in fact the gold price at around 1,600 has basically bottomed out, and you know, we look at this any number of ways, we think the chances are pretty good we have a tradable low here, then I think you're going to start to see some positive action in the gold mining stocks. because their earnings are going to be so strong. And believe me, $1,600 gold, not $1,900, but $1,600 gold is not being priced in to gold mining earnings at this stage. Another issue that I referred to was the margins. And you can see from this that in the last couple of years, and Rick referred to this, is that the cash flow of the industry is starting to be very, very impressive. And this is very interesting because it's happening at a time when most businesses are struggling. Certainly certain companies are profitable because they're not spending and harboring cash. But if you're a generalist and you just put a piece of tape over the word gold, and a generalist investor just looking at the basic earnings and cash flow diagnostics of the industry, they would have to say, and then look at the valuation, they're going to be compelled to think that gold stocks represent a value opportunity, forgetting about any sort of view of the future gold price, but just sustaining the gold price at around these levels. So here's a very simplistic cartoon, but it basically tells you what gold stocks have versus the metal. Bullion is a bet on depreciation of paper money. I fully subscribe to that. I think that's what we have facing us over the next many years. But gold stocks represent that, as well as the potential for internal growth, particularly in the smaller cap stocks. We talked about dividends, and then of course there's M&A potential. The large cap mining companies really are not equipped to regenerate their reserve profile internally. They basically are in the business of building and operating mines. So exploration, which is really the intellectual capital of the gold mining industry, tends to be in the smaller cap companies. So there will always be M&A activity. Rick referred to that, and I completely subscribe to that. So those are three ways to get return in a gold mining stock, only one of which is shared by the metal. And so in theory, and our numbers have shown in practice, that you actually can get excess return over what the gold price does. But again, it takes a lot of due diligence. You have to pick and choose. We make our share of mistakes and all of that. But if you do a decent job of that, you should be able to do better than the gold price itself. And in my view is you should have some physical metal because that's safe and there's no business risk. But for the more risk-oriented investor, having some exposure to gold mining stocks does make sense. The key thing for gold stocks is a view of the gold price, which is the one I have, and I think I'm right, but I've been proven wrong, is that we're entering a period of permanent repricing of gold. These companies are not Ford Motor, where you have a reversion to the mean, or a copper producer where you have a cyclical downturn and copper prices tank. The world we live in, we're basically going through a revolution in monetary arrangements. And those arrangements are going to result in a higher price of gold, higher than where we are today, and it's not going to be mean reverting. Gold is not going to go back to $250. It's not going to go back to $1,000. It's probably not going to, we're going to look at it in a few years and say, gee, gold at $1,000 was really a bargain. So what are the implications of that for gold mining stocks? It's that they have a level of profitability that was unimaginable when we started our gold fund 10 years ago, 12 years ago. And it's going to involve a permanent revaluation of the